Um, that was very hairy, but we are back. It shows that even in the so-called developed world, the industrialized world, we are not beyond the odd power outage or internet facility outage. So, welcome back, guys. We will still finish early today. Don't worry. We will take the punches as we roll with them. But right. So while we're here, and thank you everybody for coming back on and putting up with this. While we're here, let me just show you something that we posted in the Telegram. Where is this now? Give me a quick second. So we posted this in the Telegram groups or channels, but just in case anybody missed it, I thought it'd be a good idea to put it on here as well. And so give me a second and I will find it. It's our updated weekly schedule, just so that you can plan in advance what nights, what mornings and afternoons that you want to make to invest in your training via the webinars. You don't have to be at every single one. Well, the internet, sorry guys, it'll come up in a second. The internet is just very, very slow. I'm not sure what happened with this rain, but even though it's working now, it is exceptionally slow. Right, so let's see if this is done. Good evening, Priscilla. How are you doing? Gerard, Esther. So that leaves 2 more people. If you just want to let me know who you are, that way I can tailor the experience we have tonight to who I know is here. All right, since that will not upload, I know what to do about it. I am going to share my screen with the picture on the Telegram. At least that way, that should solve the problem. So give me a second. Share screen. That one. Cool. So this is the picture in question. 1 second. So that's our weekly schedule. Just put this out there, blow it up. Get rid of that. Aha. So that's our weekly schedule. That's what we're going to be doing. Now, like I said, you don't need to be at every single one of them. Not every single person needs to be at every single one. Sorry, every time I click on that and another screen, it takes it out. So not every single person needs to be at every single one. But especially for those of you who are new traders, I would suggest that you try and make as many live ones as you can within reason, we know you have schedules. This is overkill. It's just to be sure that you get your money's worth. So we don't want anybody thinking, I paid that money and I don't really feel like I had a buffet. No, we're giving you a buffet. It's an eat all you want. We're going to give you as much opportunities as possible to really take your trading to the next level. And the beauty about coming in the live ones, especially in the closed forums, is that we can actually work with you one on one. Like we did 2 days ago, we can help you open accounts, show you how to do work your MetaTrader 4. We can review your trades and things of that nature. So make sure you're paying for it, you might as well use it, right? So you're paying a very discounted price for it, but you're still paying for it, and you might as well use it. So that is the schedule. So let's get down to business. Let's see, has this thing uploaded? Nope, still not uploading. Okay, it has uploaded now. Cool. So um couple of questions that were asked before the last stream ended because of the internet. I'm going to go through those real quick before I cover what I want to cover today. So how to input a trade on a demo account. Gerard, come tomorrow at 11 a.m. So I'll answer that tomorrow at 11 a.m. How do you draw the order blocks? Have you watched the videos? So my answer to this question would be, have you watched the video by Talkbet? Let me show you guys what the channel looks like. So that's the back end. If you just click on, let's see, so your channel, if you go to the channel, so youtube.com/Israel Keys Wealth, this is what you will see, right? If you click on videos, it'll give you, so right now, this is the one we are on at the moment. It'll give you in chronological order all the videos that are there. Now, the ones that say, some of them you won't see because they're unlisted. In fact, one second, let me shut this one down just here. I don't want anybody going in there by accident and trying to get in here. So this one is the one that we couldn't use. So we're just gonna delete it. Delete forever. It's gone, never to return. So now there's some things you will not see because the public is not supposed to see them. Like you see these ones that say unlisted here. These are from earlier today or yesterday. They are only for students. You should be able to see my screen, Gerard. I can see my screen on the preview pane. So where you want to go is come here to where it says playlists. Now, we are going to make the playlists. So anyway, these are the playlists. Now, advanced VIP closed forums, even if you're a beginner, you want to watch these because they're going to set you up well. The beginner ones, teachings, market maker philosophy, mentorship sessions. Okay, the screen's not showing up. Okay, one second, that's bizarre. Give me a quick second, let me check it out. Yeah, it's showing up here. It's very, very delayed, but it's showing up here. So I don't know. This internet issue is causing. So is it still not showing up at your end? Let me know. Right, I'm gonna carry on till somebody lets me know whether it's showing up or not. So this playlist here, we're working on. It's okay, so not yet. Wow, that is bizarre. Um, one second. Okay, give me a second. I see. It seems to have frozen. So you can hear my voice, but you cannot see my screen. All right, 1 second. Let me see what I can do about this. Right. Okay. All right, so that works. Let me try to share the screen again. Okay. Um, and even that is still not working. Saints, it would appear is this showing now? Whoa, this is very frustrating. Folks, if this doesn't get better in the next 60 seconds, I'm going to have to take the difficult decision to close. Okay, I think it's working now. Is it working now? Okay. So, can you guys hear me? And can you see my screen now? Okay, so you can hear me, but you can't see my computer screen. Okay, so now you can hear, and now you can see the screen. What are you looking at on the screen? Can you see my charts on the screen? Can you see my chart, or you just see the picture that says Advanced Closed VIP Forum? No charts. Okay. Folks, I think we're sadly going to have to shut tonight down, which is heartbreaking because I was really looking forward to this session, but my internet seems to have malfunctioned on the other side of this rain. I'm going to need to figure out what's going on with my provider. What we can do, I'm just wondering how to make this work. Because even if I tried to use Skype, so Zoom, I would still have the same problem. Um, Right. So even if I tried to use Zoom, I would still have the same issue because it's internet based. That's the problem. So it seems everything else is working but the screen sharing function. Because I'm testing out other things here and they all seem to be working except the screen sharing function. Let's try this one more time. Right, so no, that ain't working. Okay. My charts have just come on here, but not there. Yay, you can see my charts now, right? Let me know if you can see my charts now. All right, and can you see my cursor move on the charts? So can you see my cursor move on the charts? Okay, cool. So we are going to be stuck with this screen because if I try change this again, if I try and change this to any other screen, we're going to lose connection. So let's see what we can do today with this. It's going to be an interesting video, especially at the beginning when you guys are watching it on the repeat. Everybody's going to wonder what happened at the beginning. But anyway, here we are. So for the sake of time, I'm just going to go straight into the video if you guys don't mind. Or straight into, into the mentorship if you for tonight if you guys don't mind, so that we don't suffer another technical issue. So there's 4 things we want to do today. We want to look at the anatomy of a winning trade. And there's 4 areas to that anatomy. I'm going to write them. So I'm not going to be able to show you my PowerPoint slides because if I try and move out of my charts, you won't see them again. So I'm going to have to write everything in here. So there's 4 parts of the anatomy of a winning trade that you need to bear in mind when you're trying to get success in the markets. The first one is stalking a scenario. That's right. So let's make that black or purple. Let's increase the font size. So you need to know how to stalk a scenario. Right? Are you guys still there? Let me know that I haven't lost you, because I can't actually follow you on my device because of this internet issue. So let me know that I have not lost you. If I don't see a comment after so often, I'm going to suspect that I have lost. So number 1 is stalking a scenario. Number 2 is learning how to identify a signal. I'm going to explain all this in a second. Identify a signal. Number 3 will be to execute an entry. Execute an entry And number 4 is how to manage your trade. So to manage your trade. If you can get these 4 parts down successfully, you will be an awesome trader. And it sounds easy, but as anybody who's traded a while, talk about, are you in the comment section? As anybody who's traded a while will tell you, it is not as easy as it looks. Quite the opposite. So now we've talked about stalking a scenario a lot in the last week or so. For those of you who joined the program about a week or 2 ago, it is the fact that coming into a week, a day, anything of that nature, you ask yourself, what is likely to happen today? We did this yesterday. We did this 2 days ago when we looked at the analysis. Can you predict the next candle? That's pretty much what trading is. Can you predict the next candle? If you can predict the next few candles, you'll be fine. And for instance, if you go to a weekly chart, if you can predict the next weekly candle, right, then you will have what will happen in the next 4-hour section. So this 4-hour section here, we've beaten this to death, is one weekly candle. If I can predict the next weekly candle, I can predict what's going to happen there. If I can predict the next daily candle, then I can predict what's going to happen in the next hour section or smaller. Anything from an hour down 15 minutes, 5 minutes, down to the 1-minute chart, each divider is a day. So if I can predict a daily candle, I can predict an hourly divider or lower. And if I can predict a monthly candle, it's a monthly candle, then I can predict a daily divider. Now, we do not want you, let me put this here now. I really wish I could show you my PowerPoint slides, but fine, you'll see them later. Do not trade reactionary, especially as a new trader. As you get more experience, you can pretty much figure out how to react to something you see live as you get more experience. So something shows up, oh, that looks nice, I'll take it, because you know what to look for. I would suggest to you that many of you are at least 2 or 3 years away from there. That skill comes far into your experience as a trader. It is an easy way to lose money. Do not trade reactionary. You will lose money. The best traders anticipate what we call a scenario. In essence, something that we think is going to happen, and then when it does happen, we take the trade to confirm. For instance, two days ago, you guys see this, right? I believe this was last night. We had this in our session. We anticipated that EU could do two things. It could find support in this order block here and then rally into the day, blow out that high. And I believe we also drew on my other platform, which I can't go into now. We drew out that level there. There we go. See? As a level where we would be interested in taking. In fact, we actually put a trade from the previous day, a few days ago, so I didn't get there. And so we anticipated this. Therefore, when it started to happen live during the day, we could take, so we said it's either going to push up, break here, come back there, and come there, or it's going to come up. So this happened here. Let me show you it live. That happened there, right? And then that happened there. Well, even when it came down, eventually, we said this was going to be the first level it came to, and it did. I still think it's coming there. I believe it's looking for there eventually. It may hold there. These precepts that we're teaching you, order blocks, stop hunts, market structure, candlestick formations, which we're going to teach you soon, candlestick formations, Fibonacci levels, all these things, all they do is help you form an educated scenario. Put that there. Their job is to help you form an educated scenario, because now you know how price really moves in the market. You're not just throwing trend lines and indicators. You are expecting things to happen according to a predetermined cadence, and you are stepping in with confidence to take in that cadence when you see it happen. So going back to that chart, for instance, okay, let's do this here. Let's go down here on a clean chart. This was our scenario before the day started, that we expected price to form or find support in that area and then push up into this area here. And then we expected it to come down. Type in the comment section if you can see that that played out. Can you see that that scenario actually played out? Type in the comment section, yes or no. Now, knowing that that's going to happen is one thing. Knowing that this is what the market is likely to do on a macro level is one thing. Also, in terms of it coming back down, if we throw a Fibonacci from that level to this level here, right? And we expect it to come down to at least, remember, the 38.2 and somewhere in between here. So on its way down, this is what we expect. We expect it to come into this area. But in this case, maybe even all the way here because of this order block there. Now, here in that zone, this was the zone we picked out. And as you can see, perfect. This is not hindsight. You guys saw this yesterday, right? Remember? For those who aren't here, can you guys, Gerard, Monica, I'm not sure if Monica was there. Monica wasn't there. Gerard, Esther, Priscilla, can you confirm that we did this last night? That this picture we did last night. Just confirm for the guys in the comment sections that this is not hindsight. And if it is hindsight, call me out. If I'm lying, please let the world know I'm lying. Now, that's the scenario. That is supposed to be the hard part. Everything after that should be simple. However, Tucker, please confirm if this is true. Many traders lose money not because they get the scenario wrong, but because they do not know how to identify a signal. Now, what is a signal? Let's put that here. What's a signal? A signal is a consistent and repeated pattern in price action. If you don't know what price action is, we will define that for you in future sessions, and you'll get that in the Market Breakers course. But simply, price action simply means the action that price does. In essence, how charts behave over and over again according to the principles that we teach you. A consistent and repeated pattern in price action that confirms to you that a trade setup is ready to execute. When we say setup, we mean a scenario that you have identified in advance. So for instance, this here is a setup. Last night we said we expect this to find support there in the day and then move up. And so when this happens, when it comes there and it starts to go up, that is the setup. What we predicted is now happening. However, you could either get in on this trade. For instance, if you got in here, let me give you an example of how this could go wrong. Insert indicator, pre-order tool. All right, so if you entered this trade here, immediately it entered, and you put your stop loss there. Actually, no, that's a bad example. Let's assume you entered here at this point. So here, and you put your stop loss there. Even though your setup was correct, you would have been stopped out and cried watching the trade go your way. However, another example of how this could have gone wrong is this. You could have entered here and put your stop loss way, let's say you put it down here. Yeah, so that's your stop loss. You wouldn't have reached even 121 before the trade closed. So there's other things, having seen your scenario play out, that tell you, for instance, where do you enter the trade? Do you enter here or here? Do you try and enter when it comes back here, in which case the move has already happened? What signal do you see to tell you that your scenario has worked? Now, let me give you some of mine. For me personally, this is for me, right? This is for me. Every trader needs your own signals. Something that you recognize in price that tells you this is good to go. For me personally, this is, on this kind of trade, it would be a 15-minute market structure break. And what's the structure I'm looking for? The last high before, or the highest high that happened. Okay, so for the new traders, just think, when we did expansion and retracement, think of it as an expansion, right? So that's an expansion. The expansion just before, and let's draw our Fibonacci the way we're drawing it in our training, from low to high, so that the higher levels are the top and lower levels at the bottom. So that expansion there, when it comes in, As you can see, it's at a discount, so it's good to buy. It's in the sweet spot between 38 and 21.4. I'm waiting for that level to be breached. Until that level is breached, I am not entering that trade. The signal is the signal, quote unquote, the sign to me that the trade scenario is now live. It is ready to be taken advantage of. There are other kinds of signals we will teach you over the next few months. I'm just giving you the one I took or I use the most. Once that breaches that level here, in essence, for me, this signal is live here. And what time of the day is that? That's 5 a.m. according to our server. That's 3 a.m. UK time. You and I know we are not entering a trade at 3 a.m. in the morning. It's not within our sweet spot. Our sweet spot is 6 a.m. to 10 a.m. London, 12 noon to 3 p.m. London. So the signal doesn't mean you jump in immediately. It just means the trade has confirmed. It came into that zone, so that was the scenario, and it has confirmed to you that it is very likely to do what you want it to do. The second element to my signal is this. Let me blow this up a bit more. Second element to my signal is I need a stop hunt in the same day as the day I'm taking the trade. I want to see engineered liquidity by a market maker blown out. In essence, after midnight, anything I don't care about before midnight. After midnight, between midnight and when I take my trade, I need to see someone get punished for being greedy. We talked today about greed, pain, greed, fear, pain, and pleasure. These are the emotions that drive the markets. Monica, the signal indicates that your scenario is likely to be successful. It doesn't tell you you jump in immediately. It's just saying to you, okay, we predicted something. What we predicted is happening the way we predicted it. Good. But that's not quite time to jump in just yet. So the second part of my signal is I want to see an intraday stop hunt. And we see that here. One quick second, sorry. Actually, I have just boxed myself into a corner now. That's not it. But then to show you where it is, I need to give you a principle that we're not ready for yet. Okay. Just take my word for it. I know I said after the divider, but bear in mind the divider is relative to what part of the world you're in. Just believe me when I say this today. Talkback, confirm if this is true or not. That to those of us who understand trading, there's a concept I learned from a mentor of mine. He calls it true day. It is the fact that the day doesn't really begin at midnight. There is something that is going on in the last few hours of the previous day. This is a range. This entire space here is a range. We call it the central bank dealer's range. I am going to factor that into my waiting for a stop hunt. Just write that down, central bank dealer's range. We will look at it as we go further down in our mentorship. So at this point, they have been punished. Someone who put a low there to go up is going to have been blown out. Their stops are being blown out, engineered liquidity. A breakout trader who entered the trade here is going to have been punished as well. So this is number one. Let me put this in here, text. So this here is number one part of my signal. Number two is when price breaches this high for market structure break. So that's 2. So that's my signal. That tells me this trade is very likely to be successful. That's the signal. It's a 2-part signal for this particular trade. The third thing I now need, remember, is an entry. We call it an entry pattern. How do I take this trade in a way that guarantees me the lowest risk and the highest reward? There are several ways to take this trade. Several. But remember, I cannot take this trade until after number 2 happens. I am not touching this trade anywhere left of this line. Anywhere left of this line, this is a bad trade for me. It is only to the right of this line, to the right of the line here, that I have confidence that my anticipated scenario is playing out. So on the right side of this line here, I need an entry pattern. Write that down. Entry pattern. And just like a signal, your entry pattern should be consistent and repeated. Just like a signal, your entry pattern should be consistent and repeated. Something that works day in, day out. You don't change it every single trade. The same set of rules. Now we're going to put this here. Rules. The same set of rules that govern how you trade. We looked at on Sunday at developing a trade plan using the laws of liquidity and the 4 core beliefs you must have as a trader. Can you guys remember the laws of liquidity? Who can remember them? Who can remember the laws of liquidity? Who can remember the laws of liquidity and the 4 core beliefs that every trader must hold? Okay, go back and watch Sunday's session again. Anyway, let's come back here. 1 second. Let's see if I can find this for you. Right. Let's see if I can find this for you. So, okay, so this is not Sunday, but this is the first one we looked at from a couple of last week. So market makers are position traders. It means that we need, because they're position traders, we need to do top-down analysis, meaning start from a higher time frame because those are the time frames they're looking at. Price levels are valid for long periods of time, meaning points, significant levels from years ago could come into effect. They have, let me close my micro down so you don't get distracted. Price has seasonal tendencies, meaning at certain times of the day, month, year, and even decade, certain things are likely to happen. Market makers go for huge pip objectives. Therefore, when they're looking at a trade, the moves they sponsor tend to go over long pip ranges. and their actions cause significant momentum and displacement. So those were the rules from there, but those are not the ones I'm looking for, and I can't go to my PowerPoint because we will lose the screen sharing feed. So let me see if I can find it on the chart. Let's see if we can find this. If we can't, just go back and watch the video anyway. So just go back and watch the video. So I'm just going to carry on for the sake of time. Right. But anyway, where were we? Where were we? So let's go back. So you need rules, meaning something that you do every single time. Why so many traders lose is you change your approach from one trade to the next. If it doesn't work on this trade, you change it by the second one. Then what you did that didn't work the first time now works the second time. So you change back for the third trade, but then it's then the second trade's principles that work, and you keep losing because you don't stick with a particular set of rules long enough to give them a chance to demonstrate their value. You want to have at most 2, maximum 3 entry patterns that you use to enter a trade. And you wait for them every single time. Let me show you some of mine. I'm going to show you 2 of mine. 2 ways you could have entered this trade today. The first is after this signal here, right? You wait. Because once this is gone here, so actually the first one is you could simply just put your entry there above that level and put your stop loss beneath that low there. So that's entry pattern 1. The moment it breaks the market structure level, you just get in straight away. Now, we're not going to get in at 3 a.m. in the morning. This is 5 a.m. server time. We're going to wait till at least 6 a.m. So that's 8 a.m. server time. The problem is, by the time it's 8 a.m. server time, the trade has gone. So to follow our rules, we can't. Okay, 1 second. I think Gerard has put that screenshot for me. Let's see if I can find it. Okay. Right, so let's see if I can find it here. Right, where did you put it? Right, did you put a screenshot of the rules on the group? I thought I saw it just now, a screenshot of the rules on the group. Okay, I think you sent it. Okay, let's see. Aha! You're the man. So those are the rules we're talking about. You are the main man. Thank you very much. What have I done? Okay, so those are the rules. So trade plan, you need a directional bias, long or short. You need your key levels. You need your significant time periods or tendencies to understand what the significant time periods or tendencies are and incorporate that into your plan. You need an anticipated scenario. This is where we're starting from today. Something you think is going to happen based on the first 3 things. You need a signal. We've looked at that already. You need an entry pattern, and you need to manage your money, your risk, and the trade. Now, the first 3 things, the directional bias, key levels, and significant time periods, and your anticipated scenario, you need to believe 4 things. 1, price is not random, meaning there is a method to the madness. It behaves the same way over and over and over again, meaning if you learn how it behaves, you can apply it going on several times over. Secondly, price is a fractal. It means it follows the same rules at every single time frame. High time frames, low time frames. When you drop down from one time frame to another, you need to have faith in the fact that the principles you saw work on the higher time frame will also work on the lower time frame. Thirdly, you need to believe that lower time frames are controlled by higher time frames. In essence, what you are seeing play out on a lower time frame will respect the rules going on a higher time frame. So that's why you can predict the 1 hour, a weekly candle, then drop down to a 4-hour chart and expect it to play out between the dividers, because you know that the weekly time frame is controlling the 4-hour time frame. And 4, the price will always respect liquidity. In essence, it will be drawn to levels of liquidity. And then you ask yourself 3 questions. These were the laws of liquidity. I think there's a 4th one missing, but it's where's price coming from, where's price going to, what is it likely to do along the way. So let's apply that here. Thank you for that, Gerard. Let's come back here. So we've applied the significant level. That's where this, one second. This order block here, we figured out was going to be a significant level. Another reason why we figured it was going to be a significant level was if I just draw this line here, you'll see that that level, see that level there is that high here. It's respected several times moving into the past. So we have our significant level. We have the fact that the order block formed there. We have the fact that we put a Fibonacci. Wrong way. Let's draw it the way I taught you to. Low to high. And that this is forming at around the 61.8 level. The seasonal tendency that we've applied here is that significant moves are going to happen between 6 and 10 in the morning and 12 and 3 in the afternoon. Therefore, entry pattern 1, which is simply to put your entry above the market structure break and your stop loss beneath that low, will not work here because it is violating that rule. What rule? The rule that our entries should be between 6 and 10 or 12 and 3. Now, you could break the rule here and it would have worked for you, right? You would have been happy. The problem is when you break a rule, eventually the rule will break you. You will take a trade at the wrong time that you will cry about because you broke the rule. Secondly, if we entered this way, our stop loss is 11 pips. So the maximum we would have made entering down here would have been 1, 2, 3, 4 to 1. This is where entry pattern 2 that I use works well. Once it breaks market structure, I wait for it to dip back. You've heard me say that several times, guys, right? I want it to dip back beneath the market structure level into an order block there. So beneath this market structure level, I have 2 order blocks. The first one is down here. Down here. But the second one is up here. That's another block there. When it respects that, whichever of the 2 it respects, I need a 1 hour engulfing in that direction. I need to see a 1 hour engulfing in that direction. But I have already seen the engulfing. This candle here was my engulfing. You could argue this one here, but it closed back here. This candle that closed above there engulfed this one here. That was the last down candle. So to answer your question, Esther, let me give you an example of a clear engulfing. So let me see. Let me find one for you that's obvious. So Esther, you asked the question about the engulfings. Let me give you an example. See this candle here? This down candle, up candle, sorry. So price is going up, and then the next candle, now I give it usually 2 candles maximum. I need to see the engulfing happen within 2 candles. If by the second candle after the last candle in the previous direction it hasn't happened, I don't trust it. But the very next candle, as you can see, takes price the other way, clears the entire body of the previous candle, or the entire range of the previous candle, and closes beneath it. It has to close beneath that candle. If it came out here and goes back and closes up there, that's not engulfing. It has to close down here. When it does close down here, that is a powerful sign that price has reversed. It's one of the ways you prove a reversal. It's not the only way, but it's part of what we call the reversal profile. There is a video on YouTube. It's free. It's called Market Profiles, and one of the profiles is the reversal profile. Experienced traders, go watch it. So that's what we call a bearish engulfing, because price is going down. Up is bullish, down is bearish in your charts. And so because price is coming down the other way, it engulfs this candle. Now let me show you the opposite. This is the opposite here. As you can see, this candle here was the last down candle in this move. And this other candle, the first one engulfs the body, but the second one fully clears the entire range of that candle. As you can see, this second candle here completely takes out the whole range of the first candle. This is a sign that this pair has reversed. It is called an engulfing, and in this case, it is a bullish engulfing. For the new students, let me just put this here. For the new students, let's just put this here for you. When we talk about trading, up is also known as long or bullish. Down, experienced guys, just pardon with us. We got a few of the rookies in the group tonight. Down is also known as short or bearish. So when you hear those terms, that's what they mean. Up on a chart is longer bullish. Down on the chart is short or bearish. So that's what we mean by that. So coming back here, so that's a bearish engulfing. This is a bullish engulfing. On the 1 hour chart, as part of my signal, I have to have seen a 1 hour engulfing. Where is that? There we go. This 1 hour engulfing here, because this is the level here. This is the candle that I'm waiting to be engulfed. It's a very tiny candle. It's a very, very tiny candle. It's that candle here. Let's take this away. We've used this to find our level. That's the candle I'm waiting to be engulfed. So a particular candle has to close above it. So let's count. This one doesn't close above it. This one spikes above it but doesn't close above it, but this one does. and it closes significantly above it, right? Seeing this engulfing here, I know the price is going to dip back down into it. It's going to come into it somewhere around the midway point, but it also has to be beneath the original market structure break. Well, if you go to a 50-minute chart, you will see that it is dipping. I'm going to take this away now. It is dipping into this order block here. And when it does that, it comes back above it. Now, you will notice that this is now in the time zone we can trade, right? Actually, it's not. I take that back. This is still 445. But this could have been another entry for me. I could have entered here. And I put my stop loss there. And I would have got 1, 2, 3, 4, and higher than 4. See how waiting for those rules to be fulfilled means that even though I'm entering halfway through the trade, my risk to reward ratio is still better. However, to fully respect the seasonal tendencies of time, I should be waiting for a trade after 6 o'clock UK time. So 8 a.m. server time is 6 o'clock. In essence, I am only taking a trade now on this side of the chart. On this side of the chart. So now the question is, knowing that this scenario has played out, knowing that my signal has been triggered, can I find an entry on this side of the chart after 6 a.m. in the morning? Sometimes you can't. The times you wake up 6 a.m. in the morning, the trade has already gone. There's nothing you can do about it. Just move on. But the answer is yes. And I'll show you that finally. And you see that this is actually the best entry of all of them. The one that happens in the time you should be looking for an entry is the best entry in all of them. So we've seen our setup, our scenario. Price is coming to this order block. That was the scenario. And it has pushed up. We've seen our signal. 1, an intraday stop hunt or within the dealer's range. 2, a market structure break to the upside. Thirdly, we wait till 6 a.m. Meaning we're hunting the trade on this side of the chart. Well, once the market structure break has happened, see this here, right? This is the first expansion. From here to here is the first expansion. Then there's a retracement. Then there's another expansion and a slight retracement. And then a big expansion here. Let's take the expansion that formed at the market structure break level all the way to the last high after 6 a.m. So this was the high that coincided or that formed, the last high that formed after 6 a.m. See that there? This gives us a perfect, actually, I take that back. This is not, so this is the one I'm talking about. This one here. The first high, sorry, not the last high, the first high that forms after 6 a.m. That there is a perfect 61.8 entry. If you draw it the other way, the way I taught you guys to draw it, from high to low, it's a 21.4, no, 38.2 entry from there to there, right? Now, remember, we buy at a discount, we sell at a premium. Remember that? And a discount is anything beneath 38.2. A premium is anything above 61.8. This is in our discount range. And notice price, sorry, that's what I'm looking for. Price gives you 2 stabs. This one here, then it comes back in. This is the entry that meets all the rules. This is the entry that meets all the rules. In essence, we are putting our entry there. Where is our stop loss going? Beneath that level there. That's the expansion. 1, 2, 3, 4, very nearly 5. Notice how the entry that met all the rules, even though it was the latest one and the most patient one, gave the highest risk to reward ratio. That's the entry. This is where you start your trade. Now, the question is, having started the trade, how do you manage the trade? Right? Remember? We're looking at, so we've stalked the scenario, we've identified a signal, we've executed our entry now. How do we manage our trade? Meaning, where do we put our stop loss? Because knowing where to enter is not enough. Where does my stop loss go? Well, I just told you where the stop loss goes. It goes beneath the expansion point that triggered your entry. That's down there. That's where it goes. Check. Am I getting at least 4? Now, where do I expect the trade to end? We drew that line already. This line here. Look at it on a 1-hour chart. This is where we expect the trade to come to an end. At that level there. And usually 3 pips below is what we say go for. 3 pips below that level. So where is 3 pips? So let's see. What level is this now? This is... This is 1298. So 3 pips below that will be 1295. So when I put my entry there, and I put my stop loss there, 1295 is this one. That's exactly 421. So it meets the rule. Remember I told you I will not personally take a trade. I cannot see myself. I have to be able to see at least 421 from it. It may not reach 421, but when I map out the trade at the beginning, does this trade look like it will give me a minimum of 421? Why? We've looked at this several times over. I'll show you again. Now, this is with 521. With 521, if I win half of 10 trades and lose the other half, I'm still up 20%. The odds are in my favor. This calculation is 5-1. But 4-1 we say is our minimum. So, coming back here, if this is 1295, meaning this is my exit, that's exactly 4-1 to the pip. So I take this trade. If I couldn't see myself getting 4-1 at the expected exit, now it goes higher, that's fine, I don't care. This is where I have planned to get out. This is where my take profit would be going. Also, could it be, and also, for instance, as I'm going up, if by the time I get up here, there's no way my stop loss is still going to be down there. I am going to have moved my stop loss because every time I move up, I'm going to be banking in some profit as I go along. We'll teach you that later. So you ask yourself, where do I take some profits? Where do I close half of my trade? Where do I move my stop loss? These are all questions of management beyond the scope of today. We get here, the trade reverses. Now, I didn't take the trade going up because I was asleep. I did take the trade coming down. Right? Give me a quick second. Let me show you. I did take the trade coming down on this account. Let's see if I can find it. There we go. Okay, no, it wasn't on this account. It was on another one. Okay, so I'll show that to you here. Right, so this was the trade, and I'm going to close here for today. Thank you guys for sticking through the technical issues at the beginning. We're going to go home now. We're going to sleep now. So that's the same trade, just on a different chart. Delete that. So the entry was here. Stop loss was there. 1295 was our exit. That was exactly 421. We came out. On the way down, I took the other trade. Now, our scenario for this trade was it was going to get here and reverse. Well, did it get here? Yes. It got to that order block. Did it reverse? Yes. Now, let's repeat the exact same process. I'm going to do it quickly to show you in real time. The scenario was we expected it to get there and reverse. So it gets there. That's the scenario. What's the signal? The signal is, again, an engulfing, a 1 hour engulfing. Where does it engulf on the 1 hour? Here. That's the 1 hour candle that took it up. And if you want to use the entire candle, not just the body of the candle, then that's the level there. So at the point at which this breaks through here, it has engulfed. I would argue that as an experienced trader, that's the level where it did. It goes back up. Now, you guys saw me take this trade live, remember? I took it with you while we were doing our session this morning. Why did I know to take it? Well, first of all, if that engulfed there, I expect it to go back into this order block at the top there. So I'm not taking the trade down there. I know it's going to go back there. And so I put my entry, as you can see here, dropping down to a 15-minute chart. I put my entry 3 pips beneath there. That is the 15-minute order block there. Inside the 1 hour order block. And so 3 pips beneath that. That's exactly 3 pips, as you can see. So that was my entry. My stop loss goes literally at the top of the order block. And where is my take profit? Well, if you remember, when we showed it at the beginning, we said the fact that we expected price to potentially be held in that zone. Let me find that chart for you and show you. Boy, I'm sleepy. Right. Where are you? Not you. Let's see. Could it be you? I can't find that. Anyway, we showed it at the start of today, so I'm sure you guys saw it. I'm just gonna. Oh, there it is. Is that that one? No, 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 not that one. Anyway, I'm just gonna carry on for the sake of time. So, oh yeah, I think that's it. So we'd already drawn it on this one about the fact that we expected. So we drew that out there. We expected that to happen there. And so going back to the origin to the chart, I'm getting a bit confused with all my charts now. Not you. Not you. Not you. Which one was I using just now? That one. And so I put my exit here initially because we were tracking this one down there. However, I knew at the back of my mind that we'd already said there was a possibility this is where it could have come to. And so, scenario, signal, entry. The entry was 3 pips beneath that on the comeback. Trade management, stop loss there, exit here. Does it meet at least 421? You bet it does. 1, 2, 3, 4, 5 and a bit. Now, when the trade got here, I told myself, take your winnings and go home. This could have easily dropped here, but I already have 4, almost 5 to 1 here in this trade. Why risk anymore? And therefore, I came out there. But as you can see, as we showed, there is a 4-step principle. You don't just jump in and start taking trades left, right, and center. You stalk a scenario, you identify a signal, you execute your entry, then you manage your trade. Don't trade reactionary, you will lose money. You have to have a plan for what you think is going to happen. Wait for that plan to happen. Have a set of rules, and we're going to work with you about these in the next few weeks to develop your own signals and your own entry patterns that work for you. They have to be things you can spot yourself. They jump out at you when you look at a chart. How to execute your entry and how to manage your trade. So on this one, I managed my trade by saying the moment it got down here and it started messing around, I was out. I didn't wait to see if it was going to go further. That was my way of managing the trade. I wasn't going to come out here because that's not 4 to 1. And the fact that this was violated going up, we knew it was going to be violated coming down anyway. And so I closed my trade before the take profit because of the rules told me I've passed 421. There's an area of resistance here. It was getting to about 4 p.m. in the day. Again, it was outside the 12 to 3 zone. These are all the rules that we've been teaching. Time rules, tendency rules, price action rules. This is how you bring them together to form a profitable trade. Any questions real quick before we go? Because it's really a lot later than I planned because of the internet issues. Any questions? I'm going to take 2 questions real quick, and then we're going to have to run. I know there's a delay between me speaking and you hearing me, so I'm going to give it 30 seconds. Right? None from Gerard. Anybody else have a question for now? New students, just stick with this. This is an advanced class, but I asked you guys to come in if you could, just to begin to tune your ears to the language. But at your own forums, the beginners forums, we're dealing with, basic issues. But these are some of the more advanced techniques or advanced principles you need to bear in mind. Okay, no questions from anybody. thank you very much for hanging out today. Yes, Monica, go back and watch and listen again. Before you run, real quick, one more time, everybody. This is the schedule for the week. This is the weekly schedule. Put this in your diaries. You don't have to make every single one, but go back and watch it. You're paying for it. Get the information, right? Make the most of it. We're giving you a buffet for far, far, far worth far, far, far more than you're paying, but maximize it. Take your time, and also, like I announced, the vast majority of these sessions will be taught by Talkback and or myself, but Joshua is available to you as a resource. So reach out to Joshua to go through stuff that you need help with. You can arrange Zoom meetings or WhatsApp lives or whatever. Reach out to him. Now, as a rule, only ask him to help you with stuff that has been taught. And I'm going to give him strict instructions because we don't want you running ahead of yourselves. I know you might be looking at things online, YouTube, other trainers, that's fine, but we're responsible for the content we teach you, not what anybody else teaches you. We want to take you through it in an orderly fashion so it doesn't confuse you. So I'm going to give Joshua strict instructions. If you ask him questions on stuff that we haven't already covered, he's to tell you wait, so that you don't blow your brain up by trying to be too quick. But I think, let's see again what days he gave. One quick second. New to his chat. Right, so Joshua said, let's take this off so you can see it. Joshua said that he is available Monday evenings, Wednesday mornings, Thursday all day, and Friday all day. So hit him up tomorrow and then Sunday evening. So let me just copy that. Let's copy that and put that in here. So Joshua is available Monday evenings, Wednesday mornings, Thursday all day, Thursday and Friday. Both all days. So for the beginners, Joshua is your personal tutor. For the advanced students, Tokbe and I are going to be your personal tutors. We're going to share the responsibility between ourselves. So you're paying for not just the slides you're going to get and the pre-recorded videos. You're paying for these mentorship analysis sessions. Let's put that there. Let's go back and show you that again. You're paying for this. So you're paying for the slides and your course material. You're paying for your pre-recorded videos. You're paying for these regular webinars every week where you can interact. And you're also paying for access to ask us questions, get our help, our hands-on mentoring. I'm hoping some of you become good enough to come back and work for us part-time or even full-time as traders or instructors. We're going to give you everything we have. Make the most of it. All right, guys. So in passing, thank you for sticking with us today. I will see you. I am going to be on with Joshua at 11 a.m. tomorrow. See you then.